$3.4 trillion. That's the current market cap of NVIDIA. And out of all of this money, they only have around $130 billion of revenue. Only. Well, $130 billion is huge, but that is a 27 times multiple. During the housing crisis of 2008, we only had multiples of 6 to 9 times, and then the market crashed and burned. Now, that's not the terrifying part. The terrifying part is that most AI startups have a multiple of around 17.8 times, which is huge. And aside from that, 46% of all funding, of all VC funding of last year went directly to AI startups. Let's talk about how this is actually a problem and what is going to happen next. Now let's start with NVIDIA. NVIDIA has a market cap, as we said, of 3.4 trillion and revenue of 130 billion. If you divide this by this, that is a multiple of 27 times. That means you're paying 27 times for $27 for each dollar they make out of revenue. In comparison, Apple's ratio is around 8.6 times. But hey, at least NVIDIA has a very strong product and has been around for quite a while. Let's look at another company for comparison, OpenAI, AI's favorite company. They have a valuation of $300 billion. And they're making revenue. They just hit recently $10 billion of annual recurring revenue. So they might hit 20 or so. I'm not really sure because we're still in the middle of the year. But at the end of the day, this is around a 27 times multiple, which sounds okay, very reasonable, very close to NVIDIA. The only problem is their profitability is actually negative $5 billion at the moment. Yes, they lost around $5 billion in 2024. Think about it this way. Every time a new user comes to ChatGPT has to pay money for this, yet, and they're losing money for this, yet they're valuable than most Fortune 500 companies out there. Now, the real kicker, as they would say, is that most AI companies are similar. They have a ratio of around 17.8 or 18 times, and they have billions in valuations, but 0% profitability. 62% of AI companies have zero profitability. But a $10 million valuation, which makes you think it's kind of a good purchase, isn't it? When you think about it, Amazon was similar, but Amazon was a special case, and it was one of the few companies that are like that are going with a zero profitability and just reinvestment policy. Nowadays, all AI companies are like that. They're all trying to become the Amazon of the future, and honestly, the future doesn't have room for all those Amazons. Never in modern history has a single technology dominated funding of venture capital in this way. Then there is the deal sizes. 23 funding rounds, each exceeding $1 billion each. $23 billion just going to business models that are not even profitable, and we don't even know if they're ever going to be profitable. Now let's go back in time to 2008, where housing markets hit valuations of 6 to 9 times, where the historical norms were around 3 to 4 times in locations like Las Vegas and Miami. So we were just 2 to 3 times a little bit more. Just this small overvaluation and our ability not to see it led to a huge market collapse. Millions of people lost their homes. The financial market collapsed, and you know the rest of the story. Now, AI are around 18 times, not 2 to 3 times, 18 times. Even if you sort of fix it because we're in the future, 18 times is just huge. 2008 was not that long ago. And it just kind of feels similar. Think about it. Excessive valuations, all capital going to a single thing. People there thought, invest in a house is the best thing. And people would always say this time it will be different. But here's what's really different this time. AI is not like the housing bubble, because the housing bubble at least had houses, which are tangible assets. AI companies mostly don't even have that. They don't have patents. Most of them don't have patents. They don't have technology that is different in this sense. Someone would just take an API of OpenAI, put it on a product, and call it, this is the new thing that uses ChatGPT to plant fruit. But hey, the housing bubble took years to build, right? Nowadays, any company with any product like the planting fruits company, AI company, would raise funds in a matter of moments, and those valuations would be millions of dollars. So due to this incredible speed of raising funds, you ought to expect also that there would be a bit of a higher speed when it comes to collapse of the market. Fortune 500 companies are planning over $300 billion in AI spending for 2025. Microsoft alone, $75 billion. Meta, 60 or 65. Amazon, I don't know how much, but it is in the billion mark. But similar to internet startups back in the days, around 80% of AI startups fail. We don't have this statistic because they're currently working out. Other companies with customer support agents or AI agents that are just faking it we're starting to see that they're failing. But in order for us to get a good statistic of how many AI startups fail, we're going to need a lot more time. But at the moment, it is not low at all. Don't be tempted to just believe if a few companies have a bit of a valuation, a bit of fundraising, meaning they're successful. On the contrary, almost big companies are quite few when it comes to the AI world. Now, the Federal Reserve studied the impact of AI, and it was concluded that AI saves around 5% of the workers' time. We're investing all this money to save 5%, to increase our productivity by 5%. That's not a fair ratio at all. And in the companies or in the business world, only 17% of those companies attribute 5% of their profits to artificial intelligence. But 92% are actually increasing their AI spending. The numbers just don't make any sense whatsoever. And that is why this is not really rational business decision making. It's textbook fear of missing out investments. The whole market is like that. Now, AI defenders will tell you that this time it's different, that companies like NVIDIA are having real revenue, which is true. NVIDIA does make real money, 70% gross margins in data centers. That is huge. Companies like Cursor AI made around $500 million in revenue in 3 years, and I personally use their product. It is quite a good product in this sense. But here's the problem with the statement, this time it will be different. Yes, it will be different. The internet was different. That didn't stop the market from crashing and taking a ton of internet startups along the way. So yes, the internet did change the world, but it cost trillions in market value. Amazon survived, Google survived, the technology was real. AI technology is real. But the question is, are we going to face a similar crash? Are the companies actually going to crash in this sense? Remaining would be only a few companies, possibly like OpenAI and so. Both things can be true. There could be a market crash and some other companies might survive. Look, here are the facts. 46% of all venture capital is flowing to one technology, artificial intelligence. 80% project failure rates, 2-year timeline to unicorn status. 62% of AI startups valued at $10 million plus with absolutely zero revenue. When you see this level of capital concentration and this trend, history tells us that a correction is about to happen. That's just what happens. That's what happened before and what will happen again. It's just natural. So before you go all freaking out, will NVIDIA survive this market crash? Probably, because it's a huge company with real revenue. But will the thousands of other AI startups survive this crash? Possibly not. That's what history would say. The technology is real, the productivity gains are real, but so is the overestimation and the overvaluation. And I'm not telling you not to invest in AI, that's not my place. Check out with your financial advisor in this sense, because this is not financial advice at the end of the day. Yet, the difference between Amazon and Pets.com was not the technology, it was the business models. Let's just not believe that any company with AI next to its name that raised $300 billion or so is the next Google of the AI world. Let's just not do that. Thank you for watching this video. If you want to chit chat, comment, and let's just talk.